All right, my friends, today is July the 8th. It is Monday, pretty late into the New York session. Hopefully everybody had a nice weekend. Let's go ahead and get into the market outlook and plans for the week ahead. So the first thing I want to mention is the news event that we have on Thursday. Thursday is going to be the CPI, so definitely expect some volatility and some flows based around that. Given how bears are obviously in control right now, I would probably expect some more selling this week going into that event with the classic event unwind reversion. So that's probably going to be an actionable setup that I'll take. Looking to get long late Wednesday or early Thursday in anticipation of the unwind. Okay, before I get into the outlook, quick introductory shill on some couple of things. So one, you guys should already be pretty aware of this. I've been working on the introduction to trading guide for a while now. It's coming along somewhat, not as much, and not making as much progress as I'd like. I have a lot of things I'm working on right now, which is basically meaning that nothing is getting done quickly. This is going to be great though. I'm going to put an official date and say it's getting shared in the Paragon group this week. It's official. Now I can't come up with any sort of excuse, so you guys will see that this week. Next thing that I'm going to mention is a new YouTube channel. So I haven't made it yet, or really started to work on it yet, but I've got the idea for a new YouTube channel that I'm going to be doing. It's going to be education centric, around trading, obviously. But yeah, so that'll technically be like my third or fourth channel. I'm not going to release anything too much on it. I just wanted to kind of put the baited hook out in front of you guys so you guys can get excited for it. For people that are looking for education around the style that I trade, that new YouTube channel is going to be great. So I would say in about another month or two max, you guys will see the announcements on it, and then content will start to come out. So that's going to be great. Really excited about that. Okay, let's go ahead and get into the outlook itself. So as far as the macro goes, there's been some slight changes, but no dramatic changes. The core thesis here, I'm still holding on to bullish later in the year. There's always that argument around thesis invalidation versus positional invalidation. Yeah, I invalidated a lot of my positions over the past, month. I'm very fortunate that I was kind of quick to shed a lot of that risk and go to being truly properly hedged. So I did shed a lot of altcoins. I still have the same central thesis, though, that we're going to be bullish later in the year. And I know that market structure looks really bad right now. And don't get me wrong, I'm not rushing in to buy any of this stuff. I want to buy a lot of things back, but I don't want to be quick to doing that. So for the foreseeable future, bears are probably going to be in control over the next, probably month or two. And then I still think that we're going to end up resolving upwards later in the year. That plan starts to get lost, I think, if we lose 52K. But even if we lose 52K, 2021 value area high, we could still come all the way back down into the 40s and still trade up later in the year. So I'm not really trying to get smart with it and flip-flop back and forth. I'm sure you guys are seeing that a lot right now. You're probably even tempted to be flip-flopping a lot yourself right now. From a positioning and risk standpoint, I'm playing it super safe right now. I've been in defense mode for a while. About a month ago is when I really shifted to max defense, like full up cockroach mode, where I sold off a ton of my memes and things like that. I'm going to continue to play defense with the mindset that I want to be a turbo bull later in the year. So that's pretty much it for the macro summary, right? If you're interested in gaining access to the spaghetti template and learning how to properly utilize it, you should consider joining the Paragon group. I'm still thinking that we're going to continue to chop and bleed. We have some pretty significant supply overhang right now, so we're just waiting for the supply to get, finish getting distributed. And I think that, it's the beginning of July right now. I still think that by the time we get closer to September and October, that the market's going to have a very different tune, and sentiment is really negative right now, but just wait till October. I think sentiment is going to be the complete opposite at that point. So that's it for the higher time frame, right? Just got to survive until Q4, basically. Don't get jebaited by all the stuff you're seeing on Twitter about the supply. Likely what will happen, in my opinion, is that all the supply that the German government needs to sell, that's going to create the bottom, right? People think about these kind of events where there's large entities selling and people kind of front run that and then expect that they're going to see downside continuation. Yes, their selling is going to have downward pressure on the market, and given the structure, it's going to drive it down, obviously, right? But it probably is going to be the flows that create the bottom, right? Whoever's absorbing that sell side pressure, right, that they're going to create the bottom. So on medium time frame, I want to paint the picture that I know I said a lot of bearish things right now and I'm playing defense. I think that we're setting up very soon for the reversion on medium time frame. So what that's going to look like, I'm just going to lean into it as a dead cat bounce type of trade until proven otherwise. So I essentially think that bidding down into the 54s or 53s one more time is probably going to be the play. At the end of the day, I don't really know how much downward pressure that selling is going to create, so I could be dead wrong on that. It could be much lower, or it could be higher theoretically. I can't predict flows, but the general idea is that as bears are in control, I want to see another drive down, and if I see a setup to get long, then I might take the reversion long. The main upside areas to pay attention to, your first FTA to the upside is going to be around 59K. Your next is going to be around 62K. These are the core levels for sure. And if bulls somehow are able to reclaim 64K, that's where meat's back on the menu, right? Obviously, reclaiming 70K is the definitive risk on or risk off barometer. That's what I've been using for a while now. However, I absolutely would play it that if bulls were able to get through 64K, that at very least, even if they get through it and it's like has the momentum loss and we kind of like round out and lose it, that's going to give us enough time to realize that we're wrong. I think that this is kind of the best kind of key reclaim turbo risk on trade to take, right? I will be much more aggressive about it, and I'm going to be focused on these lower levels, ultimately expecting 64, 65K to kind of be the failure point for any upside momentum. But yeah, I mean, so that's pretty much it, right? On medium time frame, patiently waiting for the composite structuring to get reclaimed. The more time we spend below this composite value area low, the more likely we are to trade down. So we really want to see the Germans hit the tape, smack it down a little, see that bottom form out, hopefully see a classic momentum loss pattern, and then round it out, drive it back up into a dead cat, from which we will be trying to decide if that's going to sustain momentum and do a drive towards higher time frame supply, or if it's going to just be a lower high, right? It's been really important that you guys recognize that if this dead cat play materializes and results as a dead cat, right, and gets bounced back down, forming a lower high, that's very, very, very bad for us bulls, right? I'm defensively positioned, but still have the bull mindset because that's how I have made money over the years. So if we set a lower high in this range, where we would kind of reject it mid-range, that's where my bull thesis is gonna really be under some significant pressure and might be dead at that point. So be paying close attention to see how that plays out. I would suspect, though, that if price comes back into this area, it will be heavily shorted, which actually decreases the likelihood of it going down, right, and increases the likelihood of it going up. So that's kind of what I'm hoping for. Set a new low, form a bottom, dead cat our way back up, and have it get heavily shorted, and then use those shorts as the extra fuel to kind of hit into local supply at the range highs. As far as altcoins go, unfortunately, they obviously look terrible, right? There's very, very few and far between altcoins that look good still. I still think Solana doesn't look bad. Very happy to see that, right? Being my second largest bag in my portfolio, happy to see that Solana is still fighting for its life. So let's TLDR everything, right? As far as higher time frame goes, nothing changed, but I am continuing to play defense. On like medium-ish time frame, I think that there's probably going to be a legitimate bottom that we can trade here soon, which is probably going to line up with the CPI. So likely we're going to see sustained selling at the beginning of the week, which will end up reverting and unwinding later in the week. So that's going to be a setup I try to take. Outside of that, Not super interested in trading majors super actively. I'm probably just going to be scalping altcoins and sitting on my hands a lot. You know, these are great opportunities to work on things. So I'm going to be trying to catch up on the million pieces of content that I need to make and all other aspects of my life that I need to catch up on. So that's pretty much it for me this week. Good luck out there. I'll see you soon.